Hey, deal makers, welcome to the show where it's all about financial freedom with real estate. Let's do this. In today's episode, we're reconnecting with a familiar face, Bronson Hill. He used to work with Nighthawk, actually. He is a head of investor relations, and he's gone on and done his own thing. He's come a long way. He's raised millions of dollars in a variety of asset classes. And he's on the show to talk about how to raise capital at a large scale, but also what's going on right now in the market and how does he position what's going on in the market to investors who may be experiencing some pain right now. How is he positioning that versus new opportunities? That's the kind of environment we find ourselves. He's also just published his new book called Fire Yourself. It's all about passive investing. So we're going to dig that apart on the show as well. Before we do that, I want to give a shout out to Hunter, who posted a review on Amazon for the Yellow Book. He said this book is a detailed first roadmap. I've been thinking about syndication for a while, but was missing many pieces. Reading this book has given me most of them. That's awesome. Thank you so much, Hunter, for that. If you haven't done so, check out the Yellow Book. It's called Financial Freedom with Real Estate Investing. It's on Amazon, and I'd love to get your review if you have read it already. I'm going to shout out anyone who's been influenced by us and helped in some way to do their first deal or become financially free. And today, there's Frank and Fred. They're actually one of our mentoring students. They're working with Duhamel. He's one of our mentors, Duhamel Vallon. And 8 months after they started working with us, they just closed on their first deal, a 60 unit. And the law of the first deal kicked in like it always does. And 4 months later, they closed on another deal, a 36 unit. And they have a goal, of course, of being full-time and starting a foundation. They're from Tanzania, and they want to help the children in their country. So they have a very strong why. So congratulations, Fred and Frank, on your second deal, on your path to financial freedom and leaving legacy. So with that, let's bring on our co-host here, Garrett Lynch. Garrett, what's going on?
What's going on, Michael?
So we're talking about Bronson Hill, about passive investing today, and we're in this really odd environment where there are investors listening to the show, or maybe even people who own apartment buildings, and they're struggling. They're facing capital calls, potential losses, right? And then here we are talking about financial freedom. We're like, what gives? What is wrong with you guys? Like, why don't you guys, become a little more, what's going on right now in the market? There's a lot of pain in the market, and so I get that, okay, but you got to remember that there's a very small part of the audience is experiencing pain right now. And those are people who have invested in anything related to a floating rate debt. And that's construction loans or multifamily value add or things of that nature. And so the majority of people have not. So if you don't own a building or you have not invested in a project with variable rate loan, you're not going through the pain. In fact, now you're just dealing with opportunity. And so we're kind of doing a little bit of both. We're talking a little bit about pain and a little bit about gain. Garrett, how do we position that now?
Well, here's the thing is the plan that us, for example, we were doing the same type of business plan the whole way. What changed? Well, there was COVID, which really helped our plan, really helped everything, boosted everything, was this black swan event, sent everything in this direction. And then there's another black swan event following it, which is interest rates rising at a ridiculous rate that made everything go down rapidly, right? So, but the plan was always the same the whole time. And in fact, we'll have operations that are doing above and beyond what we even pro forma'd in certain circumstances, which is, that's what the plan was. But what changed was a swing in the market. So if you're losing right now, what can you do? Okay, well, first of all, the plan is going to stay the same. Maybe it'll change a little bit, but the plan still works. It just depends on the environment. The environment that we're entering into is one where we saw a defined peak. And I'll say this again and again. In 2012, right around between February and March, that peak, we saw where it is, and now it's coming down the other way. Now deals are 40, sometimes 50% off from the top, from the peak, even at this time. So if you are able to, you manage to look and see deals, even if you're getting hurt right now on the other ones, and you get in something that's later into the cycle, like at this phase, there is a higher likelihood that those are going to work out. Now it's difficult to understand. There's a lot of variables in that, of course, but going back in to even though you got hurt, and looking at it with the lens of, hey, I'm gonna see if I can get into something that is going to take advantage of this opportunity. And as to where things are in the market, that's hard to do, but do it. Look at opportunities from operators across the board. Say, oh, where was peak pricing? Where are things now? Okay, I see. What's the plan? Does it make sense? And if you like it, you can't be scared to maybe dive back in.
That's a good point, and we don't talk about risk adjusted return enough, right? And let's talk about that. If you look at the risk profile of deals that we did, let's say 2 years ago, okay, you're buying deals at the low end of cap rates. Like cap rates haven't been lower, interest rates haven't been lower. They're historical low. Okay, so that's on the riskier side because, well, they really can't go any lower. And so then you coupled together some variable rate loans on top of that, which were required to do value add deals in the first place. And so you put it, you layer, and yes, the IRR was 15% and all that stuff, but the risk was relatively on the higher end. Now, if you do a deal today, Garrett, the risk is completely different. First of all, no one's doing floating rate debt, okay? Or you're having like 4 or 5 year interest rate caps. So that's off the table. Interest rates now are actually what many consider to be at the high point and in fact about to go down. Cap rates are, highest in like 20 years also. And so now you're at the other end of the spectrum, right? It's within 18 months, the pendulum has swung to the other direction, and the sophisticated investor must recognize that the risk profiles are completely different. And so I think it's going to take a sophisticated investor to buy when there's blood in the streets. That's when Warren Buffett would buy, and that's what's required.
Yeah, and you're almost forced to put these different mechanisms in place because lenders are only going to go so high on what they're going to allow to be lent. So you're going to already have baked in lower leverage, and any deal that's getting done right now is likely going to be in some sort of a fixed rate scenario, whether that's them simulating it with a bridge loan that has a cap purchased or an actual fixed rate loan. So all these things are already kind of set up as a different risk profile, just because that's all that can happen right now. There were a lot of options on the table when things were going crazy, and it's something that 11 rate hikes nobody saw. Nobody saw that it's the fastest that rates have gone ever, really, in the US. So it is a black swan event. So if you're getting hurt, just know that you're not alone and that there are different risk profile deals essentially in the market now, completely different that you're looking at that have really strong fundamentals.
Yeah, that's right. And the fundamentals are still just as strong. The risk profile has changed. So the lesson here is don't let fear guide you, right? So really watch the market carefully and look for the right opportunity. You have to be discerning, as you always should, but look for that right opportunity and really look at that risk profile and compare it to maybe what you may have gotten into a couple of years ago. I do think there's going to be an amazing opportunity to buy, and it feels a lot like 2008, 9, 10 for me right now. The trick in this environment is going to be to have the guts to invest in an market like that. And if we know the fundamentals in multifamily, for example, and those fundamentals are still strong, then if we're getting something at 50, 60 cents on the dollar or even better, and we're getting fixed rate debt on it, it's an amazing opportunity. So hopefully you guys will stay in it and watch the market, as in we'll keep you posted here. So let's get our interview here with Bronson Hill. He's the CEO of Bronson Equity. He's raised over $20 million for real estate and other types of asset classes as well. And a really good interview about journey to find financial freedom with passive investing. Also about some of the mistakes that passive investors make. We talk about some of that on the show, and also what to make of this kind of market environment. How should the investor view what's coming in 2024? Let's get in the show with Bronson Hill. So check out Bronson's book called Fire Yourself on Amazon. Also, if you are a passive investor and you are looking for opportunities to invest in real estate, we would love to have a conversation with you. Our investment firm is called Nighthawk Equity. We're at nighthawkequity.com. Just schedule a call with us. We'd love to have a conversation. We're always looking for deals. It's a little challenging to find them, but we are seeing more opportunities like we talked about before, and we'd love to have build that relationship with you so that we can share that live deal when we get it as well. But, to me, just having this conversation with Bronson here, it really does remind me, Garrett, of 2008. It really does. There's a lot of fear in the market. People are getting hurt right now. I know people who had, finally got into real estate, got a rental house, lost it, right? Foreclosure. They're like, oh my gosh. All real estate bad. Never touching that again, right? When they didn't understand that what was bad was a massive one-time event that affected single-family house, it didn't affect all real estate. And so we have to discern what happened. I think you identified the peak of the market. You identified the root cause of that, which was the 11 rate hikes, unprecedented. And we know that no one foretold this because, well, we got loans, and none of these lenders would have given us a loan had they known that there would be potential distress 2 years down the road. So we have to recognize exactly what happened, understand the problem, and therefore know how to evaluate new opportunities and look at the fundamentals and look at the deal, look at the risk profile. And I think that's what's required here as we move into 2024.
Yeah, I mean, if you look at any industry, stock market, crypto, even precious metals, whatever it is, there are always swings. Okay. And there's always going to be winners and losers on each side of those swings. That's just how markets work in general. Real estate typically is a slower market cycle, but there's still swings, as we're seeing right now. We had a huge upswing and then a huge downswing. And so, I learned this when it came to like even crypto, and I was messing around with that in 2017, and I just stayed in too long, and all of a sudden all my stuff was worth nothing anymore. And I just stayed in long enough, and finally it came back. It's like that anywhere. And in this one, we're able to look at what happened, see where it went, and see how we can make it better going forward, which is really unique. And it's such a unique time because of that. They say hindsight's always 2020. In this instance, obviously it's there. And especially people like us that have a deep knowledge of our markets and just of real estate in general, while we couldn't predict that this was going to swing downwards, we can make an assumption as to where it may be headed, which I think really it's heading towards major opportunity. So, in general, not great times to be dealing with this and seeing what's happening out there, but there's bright stuff ahead in the future.
Yeah, we have our hands full as operators. We do have some floating rate in our portfolio, and it's time consuming. I won't lie. It's not pleasant. It takes the fun out of this stuff. And again, our challenge is not to get so bogged down in problems, because there's still opportunity. We have to serve our investors. We have to serve anyone who is looking for financial freedom. And here's the thing: do not try to time the market. Don't sit this one out. Don't be afraid to get in there. Now is the time to get educated about this investment class, however you get that education. And here's the thing: you're not going to be able to hear about these opportunities in the news or in LoopNet. They're going to come from brokers. So if you're not talking to brokers, if you're an active investor, or you're not talking to operators like us, if you're a passive investor right now, you won't know the opportunity. It's going to happen behind the scenes. It's going to be happening off market between operators, between banks. That's already happening right now. Negotiations. They're not going to see the light of day, these opportunities. So make sure that you get in there right now so you can see these opportunities coming. And so I think 2024 is going to be a mixed bag. On the one hand, we have to deal with a portfolio, and that sucks. On the other hand, it's our responsibility to take advantage of the opportunity that's come and then educate you on it, right? Because if we can't educate you on it and we can't you excited about that so that you invest or get into this, then we can't raise the capital and we can't take advantage, and that would be a shame. So hopefully with that, you stay inspired, and let's do that deal. Talk to you next time.